Hello friends, I hope so you all are fine. Welcome to my YouTube channel. In this video we will discuss about income statement. So come to my Google screen and see here income statement. What is an income statement? An income statement is one of the three important financial statements used for reporting company financial performance over a specific accounting period, which the other two key statements being the balance sheet and the statement of cash flow, also known as profit and loss statement or the statement of revenue and expense. The income statement primarily focus on the company revenue and expense during a particular period. An income statement is one of the three, along with balance sheet and statement of cash flow, major financial statement that report a company financial performance over a specific accounting period. Net income is equal to total revenue plus gain minus total expense plus loss. Total revenue is the sum of both operating and non-operating revenue, which total expense include these incurred by primary and secondary activities. Revenue are not receipts. Revenue is earned and report on the income statement. Receipts, cash received are paid out or not. An income statement provide valuable insight into a company operating, the efficiency of its statement underperforming sectors, and its performance relates to industry peers. Understanding the income statement. The income statement is an important part of a company performance report that must be submitted to the Securities and Exchange Commission. While a balance sheet provides the snapshot on a company financial as a particular date, the income statement reports income through a particular time period and its heading indicate the duration, which may read for the end September 30, 2018. The income statement focus on the key items revenue, expense, gains or loss. It does not difference between cash and non-cash receipts or the cash revenue, non-cash payments and purchase in cash versus purchase on credit. It states will the detail of sales and then work down the computer the net income and eventually the earning per share. Essentially it gives an account of how the net revenue released by the company get transformed into net earning, profit or loss. Revenue and gain. The following are covered in the income statement, though its format may vary depending on the local regulatory requirements, its scope of the business and the associate operating activities. Operating revenue. Revenue released through primary activities is often refers to the operating revenue for a company manufacturing a product or a wholesaler distribution or primary activity refer to revenue achieved from sales of the product. Similarly, from a company in a business of offering service, revenue from primary activities refer from the revenue or fee earned in exchange of offering these service. Non-operating revenue. Revenue released through secondary non-core business activity are often referred to a non-operating recurring revenue. These revenues are sourced from the earning which are outside from the purchase and sale of good and service and may include income from interest earned on business capital lying in the bank, rental income from business property, income from strategies partnership like loyalty payment receipts, or income from a advertisement display placed on business property. Gain, also called other income. Gain indicate the net money made from other activity like the sale of long-term assets. These includes the income released from one-time non-business activity like a company sales it all transactions van and send lands. Revenue should not be confused with receipts. Revenue is usually accounted from it in period when sales are made on service or delivery. Receipts are the cash received on the accounted for which the money is actually received. From instance, a customer may take good service from a company on 29 September, which will lead to the revenue being accounted from the month of September ongoing of his good reputation. The customer may be giving a 30-day payment window. I will give him till 28 October to make the payment, which is when the receipts are accounted from. Expense and losses. The cost of a business to continue operating and return a profit is known as expense. Some of these expenses may be written off on a tax return if they meet the IRS guideline. Primary activity expense. All expenses incurred for earning the normal operating revenue linked to the primary activity of the business. They include the cost of goods sold, selling general, the administrative expense. Secondary activity expense. All expenses linked to non-core business activity like interest paid on loan money. Loss as expense. All expense take towards a loss, marketing, sale of long-term assist on time or any other usual cost or expense toward. While primary revenue and expense offer insight into the how well the company core business in offering the secondary revenue and expense accounting to the company involvement and its expertise is managing the ad non-core activity compared to the income from the sale of the manufacturer's good are stability. High interest income from the money laying in a bank indicate that the business may not be utilized the available cash to its full potential by expanding the production capacity on it is facing challenges in increasing in market share amid competition. Recurring rental income gained by hosting billboard at the company factory situated along a highway indicate that the management is capitalizing up the available resource and assist for additional profitable income statement structure. Mathematically, the net income is calculated based on the following. Net income is equal to revenue plus gain minus expense plus loss. To understand the above detail with some real numbers, let's assume that a sport business which additionally provides training is reporting its income statement for the most recent curate Excel sport income statement for the curate. You can see this picture. I received $25,800 from the sale of sport good from the $5,000 from training service. It spent various amount of listen for its giving activities. The total $10,650. It released net gain of $2,000 from the sale of an old van. An incurred loss was $800 for setting a dispute raised by a consumer. The net income come to $21,350 for the given curated. The above example is the simplest form of the income statement that any standard business can generate. It is called the single step income statement and it is based on the simple calculation that sum up revenue and gain the subtract expense and loss. If you like our video, please subscribe our channel. Thank you so much.